Welcome back to Explain the Charts, everyone. Today, September 23rd, 2025, we're tackling one of the most talked about assets in the crypto world, Ethereum, or ETHUSD. The market is buzzing with conflicting signals, and we're here to cut through the noise by looking at both the latest news and the raw chart data. Just recently, headlines screamed about Ethereum plummeting below $4,200, with cryptos tumbling due to persistent investor fear. News sources reported a sharp 6.1% slip in the past 24 hours alone, indicating significant short-term bearish pressure. If we switch over to the one-day chart, we can immediately see the dramatic impact of this sentiment. Here on the daily chart, the candle for September 22nd, 2025, perfectly illustrates this downturn, closing significantly below $4,300. Specifically at $4,202.94. Notice the low of $4,000 hit during that day, a critical psychological level that was tested. This abrupt drop follows what NewsBTC described as Ethereum being stuck in a wide consolidation zone between $4,200 and $4,700 for several weeks. Indeed, looking at the price action from late August through mid-September, we see ETH oscillating within this range, occasionally pushing towards highs near $4,900, but failing to break above $5,000, as mentioned in the news. The previous all-time high attempt in August, peaking around $4,889, also corresponds to our historical data here. The Crypto Times also highlighted significant ETF outflows in late August and early September, totaling hundreds of millions, which likely contributed to the building selling pressure and market volatility observed. This capital drain, coupled with reports of $32.86 million in liquidations, paints a clear picture of a market under stress, culminating in yesterday's sharp move down. However, not all the news is bleak. We have strong counterpoints. A compelling headline from Crypto News claims billion-dollar firm BlackRock pumped $500 million into ETH, predicting $10,000 just weeks away. The Currency Analytics reported a short squeeze risk as stablecoin inflows signal potential rally and suggested Ethereum may be currently undervalued based on on-chain data. These bullish indicators, particularly the institutional interest from giants like BlackRock and Grayscale preparing to stake substantial Ethereum, provide a long-term optimistic outlook despite recent price action. Furthermore, Vitalik Buterin's continued focus on scaling Layer 1, unifying Layer 2s, and the upcoming Fusaka upgrade for better efficiency underscore robust fundamental development. Now, let's zoom into the shorter timeframes to capture the immediate volatility and understand the current market dynamics. We'll transition to the 1-hour chart to examine the recent price action more closely, especially around that significant drop on September 22nd. Looking at the 1-hour chart, the impact of the news becomes even more palpable. Let's focus specifically on the period of the sharpest decline, around September 22nd, between 5:48 Universal Time Coordinated and 6:03 Universal Time Coordinated. Here, we can clearly see a rapid sell-off, with price dropping from over $4,280 down to a low of $4,000 in a very short span. This rapid bearish move, accompanied by high volume, indicates strong selling pressure and likely triggered many stop losses. However, following this flash crash, we observe some buying interest, forming a base around the $4,090 to $4,100 mark and a gradual, albeit choppy, recovery towards the $4,200 to $4,250 range by the end of the day. The price is currently hovering just above this range, with the last 15-minute candle closing at $4,203.29. This short-term rebound suggests that while fear might be present, there's underlying demand preventing a deeper capitulation, aligning with the news about stablecoin inflows signaling a potential rally. Switching to the 15-minute chart, we can gain even finer detail into this recent price action and microtrends. On the 15-minute chart, the volatility is even more pronounced, especially in the wake of the September 22nd sell-off. The sudden drop between 5:48 Universal Time Coordinated and 6:03 Universal Time Coordinated, from approximately $4,287 to $4,092, is clearly visible as a cascade of red candles. This extreme move generated substantial transaction volume, reflecting panic selling. After this initial plunge, Ethereum found immediate support around $4,091, indicating a strong level where buyers stepped in. Subsequent candles show a consolidation and attempts to reclaim lost ground, but the overall short-term trend remains cautious, with price action characterized by smaller, oscillating candles around the $4,150 to $4,200 area. The immediate resistance on this time frame appears to be around $4,250, a level that would need to be convincingly broken to signal a continuation of recovery. The current price of $4,203.29 suggests ETH is currently in a battle to stabilize after the significant downward movement, keeping it close to the lower bounds of its recent trading range. Let's synthesize this information for traders and investors. Current trends are short-term bearish following the significant drop on September 22nd, breaking below the prior consolidation range. Immediate support was found near $4,000, which is now a critical level to watch for any further downside. Key resistance levels are $4,300, which was previously a support zone, and then the $4,500 to $4,700 range representing the former consolidation area. A reversal would require sustained buying volume to push above $4,300, potentially re-entering that wider consolidation range. For long-term bullish sentiment to reestablish, ETH needs to convincingly break above $4,700 and target its previous high around $4,889, eventually aiming for $5,000. Reasons to be bearish in the short term include the recent strong selling pressure, breaking of key support, and ongoing ETF outflows as reported by the Crypto Times. The market may see further liquidations if $4,000 support fails. However, long-term bullish arguments are robust. Significant institutional interest and investment like BlackRock's reported $500 million injection, on-chain data suggesting undervaluation, and fundamental network improvements with the upcoming Fusaka upgrade. The short squeeze risk cited by news sources implies that a rapid price recovery could catch many short sellers off guard, propelling prices upward. When deciding when and what price to trade, observe volume closely. A strong bounce on low volume might not be sustainable. For short-term trades, look for confirmation of support around $4,000 with increasing buying volume for potential long entries, or consider shorting on failed retests of $4,300. Long-term investors might consider current levels as an accumulation zone if they believe in the fundamental strength and the $10,000 price target, but caution is warranted for immediate capital deployment given volatility. To recap, important price levels to watch are the critical support at $4,000 and immediate resistance at $4,300. A rebound to $4,500 is moderately likely, around 60% probability, if stablecoin inflows translate into genuine buying pressure and we see a short squeeze, reinforced by a daily close above $4,300. Conversely, a further drop towards $3,800 to $3,900 is also moderately likely, perhaps 40% probability, if $4,000 fails to hold with sustained high selling volume, indicating deeper market fear. For long-term targets, the ambitious $10,000 prediction from BlackRock's involvement is less likely in the immediate weeks, maybe 30% within a year, but hinges on consistent ETF inflows, successful Fusaka upgrades, and broader market recovery. Always keep an eye on fresh news regarding institutional adoption, SEC rulings on ETFs, and on-chain metrics like stablecoin movements to gauge market sentiment. That's all for today's in-depth analysis on ETHUSD. Thank you for tuning in to explain the charts, and we'll see you in the next one.